Boom, we are live from Dubai, ladies and gentlemen. And just as I got here, the market started to go up and away. So we're going to be looking at Bitcoin, Solana, gold, silver, the S&P 500, just general markets. I probably should have made a video about Donald Trump almost being assassinated because that's just such huge news. But here I am, don't know how to break out of my current niche. And let's dive in and take a look at Bitcoin on the daily. So in my last previous videos, there's a few things I pointed out. Number one, we are near the bottom in the trading range, and many of the indicators were in the oversold area. Since that time, because I've been traveling the last few days, we've gone up. So the stochastic RSI is into its highs. The MACD is crossed over and pointed towards the middle line, and the RSI has bounced off the bottom. Now, we've also managed to hit the EMA, or the exponential moving averages, or the bear claw here that we have drawn out in these colors, the green and the yellow. And we've moved right into the top of that. So we've moved right into the area of resistance approximately. Now, the last videos I said around 64,000 would be the mainstay of resistance. And if we flip that and turn it into support, it's going to become very bullish very quickly. So generally, if you're at the bottom of a trading range, moving to the top of the trading range is very likely. So for instance, with Solana, we looked at this the other day. We are near the bottom of the trading range that we are currently in, likely moving to the top. Now, in that moment, we hadn't broken above the exponential moving averages, which is actually what we're seeing now. So we've broke above the exponential moving averages for Solana, which were around $146 or $146. And now it's likely we're going to turn that into some type of support and move all the way to the top of the trading range. As you can see on the smaller time frames, we are getting wicks now to the downside, and we are peaked out on the stochastic RSI, the RSI, and above the zero line on the MACD. So there's still room for upside, but generally at this moment, what I would like to see next is a retest of both the exponential moving averages and a reset of the stochastic RSI. So that would be this one here. If that comes all the way to the bottom and the price can't go below the EMAs, we're going to continue all the way to the top of the trading range here for Solana. So the other day I mentioned there's, approximately a 40% move at hand here, and we've already done around 10 or 15% of that. I wanted to also look at hash ribbons. This is a great indicator for Bitcoin. You can find it on TradingView here. There's a few different ways to add it or look at it. But ultimately, it shows some type of minor selling and just general large selling in the market, but usually from miners. As you can see, we are still in capitulation. But in Bitcoin's history, if you were to basically ignore all of the price, which is something you can do, there are a few indicators like this which can tell you when to buy. Without needing to think a whole lot. So kind of deceiving, but you can see here pretty much if you purchased any time in the red of the hash ribbons, you're starting to buy the downside. So this is one great way to recognize fear taking place in the markets. As for instance, you can see as an example here, this is the top of the previous bull market cycle. Here, this is the top, bang and bang. And then this is the entire down cycle all the way to the very bottom in around July 2021. So as you can see, the hash ribbons actually provide you really valuable data, very similar to the fear and greed index, without having to think a whole lot. If you're dollar cost averaging just on a month-over-month basis, pretty much any time Bitcoin is in the red here, it's been a good time to start accumulation, just best done through time. But again here, even on the daily, the stochastic RSI is now peaking out. RSI is right at the middle, and the MACD is turned up. So effectively, again, for Bitcoin, what I would like to see here, and I think what would be nice, is as we move up, we break above the bands, which we've currently done. But more importantly, we test the previous bottom of the range, so somewhere around 59,000. And if the stochastic RSI resets during that process, I'm going to switch my bias to bullish again. I made this mistake earlier. I should have just known better, but I thought this was the spring. I really did. But this may have just turned into the spring. Trading ranges are so deceiving like this. This is something called scale invariance, We've gone over this many, many times. It's the ability to look at a trading range and try to help remove some of the emotion that's taking place, which is, generally why we follow these trends to begin with. So, for instance, as soon as we broke out of the downward trend for Solana here in October, when I was like, go long literally anything you can get your hands on, this was a massive move to the upside here for Solana, almost near a 10x. And there's a few beautiful trading ranges that took place before we got to the current range we're in now. So this is the other range. Back here, you can go watch our videos about this range. I got these two right. This one was a little bit wrong again. So here, I knew this was the spring for Solana. We got that part right. We knew that we had our test and our SOS and backup phase. It's got that right. Here, I kind of thought this was the spring. Now, there's some reasons to see how I made that mistake, but fundamentally, sometimes that's how it goes. Sometimes you just make mistakes in the markets and you're not going to get everything right all the time. Trading is really difficult. It's probably one of the hardest things I do on a day-over-day basis, but that's because you're dealing with a law of probabilities. You're not always going to get it right, and that makes the game even more difficult, is because you can still have done everything right. You can literally do everything right and still be wrong. That's why it's so important to use things like stop losses if you're trading. If you're just simply investing, you can do month-over-month buys without thinking for decades on end and do really well. And for most people, this is what I suggest, is look for the moment when you're near the bottom of a trading range for any market and make entries. And you will do very well given enough amount of time. So the next thing I wanted to point out is here on the daily, for Solana, we're actually still above the 200-day simple moving average, which is this green line that follows along here. That's usually our bull market indicator. When we break and close below that, it's usually when the markets are done. We've stayed above that, aside from a few wicks, really trying to test that 200-day moving average. This looks bullish to me. I think we're going to get a run up. We're going to test the middle of the range. We're going to use the volume. Let's turn on the volume profiler here. This is another one of my favorite indicators, volume profile. Session volume. What do I use? Visible range. There we go. This is usually my favorite. It doesn't have all of my settings stored again, sadly. We're just going to quickly edit this. You guys might want to know this to begin with, but I usually change the row size to 121 so you get as much data as possible. And just because I am the way I am, I like to go and change the colors to match my current screen. So more importantly, though, is actually the volume profile point of control. So within this range, which is what we're just going to do, the visible range at the moment, you're going to see the volume profiler shift. Yeah. So we're actually above the VPVR for Solana at the moment. Normally it's around the halfway mark, but there's a massive amount of buy and sell pressure that's been taking place right here. And we've moved above the VPVR, which is this middle line. The VPVR volume profile point of control, this red line here, shows you where there is the most selling and buying within a particular range. And we've just jumped above that. As you can see, we are stuck below it twice now, and we've now moved above it. But you can tell the previous time we moved above it, we couldn't get back above the range and was basically instantly rejected. We see no significant increase in supply-demand characteristics at the moment, but we see more result for the less effort, which is a positive thing. This was a massive amount of supply that came into the market with a very limited downside spread too. So there are now two things that lead us to more of a bullish signature. Number one, downspread, high volume, limited downspread. Here, low volume and recovering almost all of that spread in a very similar period of time. So ultimately, I think we're going to go almost all the way to the top of the trading range. Whether we go bullish or not has yet to be seen, but the S&P 500 today breaking into new all-time highs at its pre-market at opening up at 563. As I zoom in here, you can see we've been in multiple small trading ranges leading up to this moment, and the main area of resistance I was pointing at is around 572. So I think we're going to hit that, and then we're going to start to see a new trading range form, probably a little bit larger, maybe a little bit more volatile. Silver is also back at the top of its range and outside of it. We've been following this for gold as well, just to add some extra data here. This looks very bullish to me. This looks like a perfect reaccumulation, and we are now in the SOS phases of the accumulation range for both for gold and silver. So these are very bullish indicators across the market. S&P 500 new highs, NASDAQ near new all-time highs. And again, gold, since our previous video here just a few days ago, we've broken outside of the top of the trading range. And I suspect we're going to form some type of reaccumulation at the top here before we fundamentally start to break down in any way, shape, or form. Just across the board, Avalanche is also apparently in a trading range. And I wanted to go over Fetch, because I think Fetch might be telling us a really great story. Let's compare Fetch over the last few months. So here we have multiple months of accumulation, 200 days of accumulation, and a 400% markup, followed by a reaccumulation, and then distribution, falling down into accumulation, moving up into reaccumulation. There was a beautiful falling wedge here. All the Bear Den members who caught that one killed it. I was telling everyone to make entries right around here. I was like, oh my God, go long. This is so bullish. But here I wanted to point out this story, which is that we saw an accumulation followed by reaccumulation, moved into distribution, followed by redistribution. And then now the chance that we're betting on is what are the probabilities of reaccumulation versus distribution? Generally, again, it's kind of this stepping stone process as we had looked. It goes accumulation, reaccumulation, maybe another reaccumulation if you're lucky, and then distribution, followed by redistribution, and then maybe reaccumulation. So right now, we are in a trading range that has not really decided its momentum. But what it has done for Fetch is started to build between the 314 and the 200-day simple moving averages as a trading range. So I suspect, again, also for Fetch here, we're going to move all the way to the top of this trading range, which is around 45 to 50%, very similar to the others we had looked at, and that this is probably going to turn into something bullish. It's too early to tell, but when you're at the bottom of the trading range, it's easier to be bullish than when you're at the top. The only time it's easy to be bullish at the top of the trading range is if you have already broken out and we're in a long accumulation to begin with. If we're not in a long accumulation, which we're not yet, it's harder to make that assertion. So for now, dollar cost averaging is probably going to be your best bet. Or if you're into short-term kind of technical trading, there's a very high likelihood that we are going to rip to the top of the market here. For Bitcoin, that's around 72,000. I'd gone over this before, that there was a massive amount of liquidations, some multiple billions, that would take place around the $72,000 mark. So this just gives us a little bit more evidence that that's what we might see. So I'm going to kind of end with that data here by going into CoinGlass. Yes, okay. So here we go. You can see the Bitcoin liquidation heat map. There is, oh, sorry, this is not long enough. Let me go to the 1 month. This will give us the data we're looking for. This is not the data you're looking for. Let's do 1 year, even better. This is going to show us all the way back down to 30,000. Okay, so again, there's a big marker that wants to be potentially taken out down near 30,000, but it's going to take a lot of sell pressure to get there. It feels unlikely, but there's also $20 to $30 billion of liquidation at the $72,000 mark. Often the liquidation, these shorts are taken out by bigger players who own large amounts of Bitcoin, who want to basically add some level of security to the downside when things are up so high. So instead of selling, they will take out option calls, or they will short the market with some type of leverage just to cover them at least a percentage of their portfolio to the downside, so that they don't have to sell the asset if they're not looking for. And that happens quite often. So it's actually much easier for us to get to 72,000 than it would be to get to $30,000 to wipe out that long situation. So I doubt that that's what's going to happen, although there's definitely a shit ton of longs here, which is, again, right around that October mark. We were saying go long everything. So it shows there's a very large amount of extraordinarily intelligent investors in that space. But again, more importantly, that $72,000 is not far away. Germany has finished selling all of its Bitcoin, so it's likely we're going to rip up there and start to close out the shorts. Now, this is the final moment when we get to find out where exactly we are in this market cycle, because often you could think this was a spring, and this is actually just showing weakness. So I'm not 100% convinced that this is reaccumulation yet. That's what I thought it would be in the months leading up to it. I guess it's probably because I got a little bit trigger happy and got taken out of some positions on the way here, and hit some stop losses. So I'm just being cautious at the moment, or being patient to wait, because we could still see more downside. Effectively, what that would look like is a run up into the top of the trading range with another type of breakout and a rejection that comes back down, and then we go all the way back down to 30,000. So this is what a distribution schematic would look at, and this is what the accumulation schematic would look like. You jump above and you see some type of test, multiple tests, and then a breakout of the reaccumulation range here. So not verified yet, but the fact that the S&P 500 has been so strong, gold is so strong, silver is so strong, still leads me to believe that bullish is the most likely scenario. But right now, it's basically 50-50. The risk to reward is almost equal. Although, like I said, it feels less likely that we're going to drop to 30,000 than it is that we're going to go to 72,000 to wipe out those shorts. Once all that short positioning is potentially gone, it's going to leave a massive gap in the market for even more spot buying. And that's generally what happens too. The big players are interested in getting rid of the leverage positions so that they can buy and sell Bitcoin at better prices. So anyways, just a quick little video update. Hopefully I will be able to go live with you guys. We're going to find out here shortly. Steel with the Arcane Bear. Thank you all for joining us, and we'll see you guys again in the next episodes. Boom.